Hello everyone and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Monday the 19th of August, we've had a pick-up in sentiment actually in the last, early doors today really, whereby you've seen Treasury yields starting to tick a little bit higher. We saw that coming through a little bit on Friday, where we actually saw the yield spread between 2s, 10s improving again. 10-year yield was a little bit higher, 2-year yield a little bit lower. Subsequently, we've seen that yield spread picking up from 0 to around about 10 basis points now. And that improvement in the yield spread certainly helps to steepen the curve, and subsequently we've seen equity markets pulling higher into the close on Friday on the S&P 500, and again continuing today. Futures around about 0.9% higher. And you can see that improvement coming through across European markets, which are all around about 1% higher, which is obviously a good start to the week. Risk appetite improving in the fact that the yen has pulled lower, gold quite strongly lower, $14, almost to 1% lower on the day. So it all sort of paints a picture of a better risk appetite. Now the question would be, how long does this last for? We've seen the dollar just stabilising a little bit in the last couple of days. As I said, Treasury yields picking up. Is that pickup a sustainable pickup is the question. I think if Treasury yields continue to rise higher, then you could see a bit of a turnaround in sentiment, generally speaking, that could well have some legs in it. But if those yields start to stutter a little bit, then perhaps we're going to see the consolidation kicking back in. It's interesting to see that, zooming in here, we're starting to see a bit of a stabilisation on the Chinese yuan as well, which again is helping to settle sentiment down a little bit. We're seeing the oil price pick back up a little bit, but again, is this within the confines of a trend lower as well? So it's still an improvement that we've got at the moment, but much more that needs to be seen before you can really suggest that this move higher is a sustainable run. Another market I think is interesting at the moment is sterling. Sterling was rebounding quite strongly into the close last week, but today has fallen back again. I think certainly Brexit remains key front and centre for that move, and I think that what we'll ultimately see is that it will define the course of sterling in the next couple of months, obviously, whereby September into October, where we've got the next move on the Brexit debate there. 31st of October is the next deadline for Brexit. So subsequently now we're going to be looking at silver, which is our chart of the day. Before that we've got the Eurozone CPI, and that Eurozone's final CPI reading has come out early this morning, and it has interestingly missed to the downside. Now that revision lower in the headline CPI number, which fell from 1.1% on the flash reading to 1%, has not really done too much to impact on the euro yet today. However, that will be interesting to see if that remains the case. Now, that is the only real data point today, so we're looking out for silver, which is our chart today, as I said. Now, silver is interesting. As I said earlier, that we've seen gold, which has rolled off the top. A little bit of profit taking, similar move that we've seen in silver, actually, which is around about 1.1% lower at the moment. It's within this uptrend channel that we've seen developing over the past few weeks, pulling higher in that uptrend channel, higher lows, higher highs, breaking out, and you can see that the breakout levels have now moved towards this key resistance 1735. Those April and June highs of 2018 pretty much hit where we saw the move higher today, struggling to really gain traction. The move higher last week, and subsequently we've seen that dropping off a touch. I don't necessarily think that this is the beginning of a big corrective move, and you can see that the 21-day moving average, this green line here, which has been a pretty decent basis of support throughout recent weeks actually, and that comes in at 1667 at the moment, which is around that old breakout level of 1664. Now, we saw a bit of volatility last week where the market actually hit 1653 before rallying again. And that is certainly a basis where 1664 area with that 21-day moving average, I'm looking at that to be a decent support area for the market to come back to. Still within this uptrend channel, as I said, we've got that uptrend channel coming in around 1635 area today. So there is still some room within this channel for a corrective move. And to be honest, the RSI is just unwound back to 60, which is a point at which the market picked up previously. Is this going to be a corrective phase? Well, I think what you need to see is a decisive move lower on those MACD lines before you get really into that possibility that it could be a sustainable correction. I think anything that finds support around that 1664 level of the breakout and the 21-day moving average, I think that's a pretty decent basis of support now. So I'll be looking for that to start to come in, because I'm still viewing the corrective moves on silver to be seen as a chance to buy, and within that, I think that that's the position that we're seeing at the moment, where silver is just coming back within this uptrend channel, and I think ultimately it will be a buying opportunity. Just need to be finding support lines coming in and starting to build. You've got the hourly chart, which effectively is just consolidating really. I think it's turning into a little consolidation play, as I said, between that 1664 area and 50 on this hourly chart. But it was interesting this morning that we saw the market dropping below 1710. I'd take that as a bit of a near-term gauge as being a little bit corrective within this consolidation. But if you start to see it trading back above 1710 again, I think that could once more regain some upside initiative. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our trading videos on YouTube, and also go to our website where you can sign up for our webinars. Thank you.